Good morning, everyone. This is Anne Marie. Today is Wednesday, December the 12th, and I can already tell that my brain is in a space where it needs a little extra help, right? You ever get those mornings where your brain's got needs a little extra help? Today is one of those days. This is my third attempt at this recording, and I normally just fly right through these things. Somehow, brain not attached to the mouth this morning. So, this is it. Third time is it for me, so whatever comes out here is gonna make it. I never record more than 3 times. That's just the way it is. All right, so what have we got? First of all, let's talk about what I said yesterday. I said, hey, listen, don't really think the market's got an impetus to move, but in the end, all we need to do is watch for the breakout levels. What did we do? Notice the 61.8 level, right? We gapped up and opened right there. Market pricing is not arbitrary. And so when we see something like this, we go, oh, okay, that's a breakout level it's holding. I need to go long. Quick action event. We know that our first test is here. Second test at the top of this level, 70.07, and that's almost exactly where we stopped. Here's the thing. A lot of us forget that when we break out of a level, it's very, very likely that we come back in to retest it. Does that mean that we should not trade the breakout? Well, if you'd like the highest probability trade, you want to trade the positive retest of a breakout, which would be this one right here. So at the end of the day, when it pulled back in here and began to pop, that's the long event. Okay? Now, in these markets, things are a bit iffy, and if you take a trade like that into the end of the day with a gap beneath, it is a little bit risky, all right? Not something that I would generally recommend. I would say wait until the open of the next day, watch it particularly get above the VWAP, which is this fine blue line over here, and then move along. And that would be up above this marker right here. Okay, pre-market looks like it's doing it, right? Overall, my premise remains the same. Upside momentum, although damp, does exist. And so that's what we'll be looking at definitively today. What's the trade? We get up above 143.52. We should retest 144.18. On top of that, the breach over 144.18 brings in the 50% rule for those of you that have read the book. That'll take us into 144.73 before a likely retest of the 144.20-ish area and then a move into 145.24. As I mentioned, Harry Reid came out. I didn't mention this part, but Harry Reid came out and said something about no fiscal cliff deal likely before the end of the year. I thought, the two fellas locked away in the room were the only ones that knew what was going on, so I'm not really sure how Mr. Reid knows that, but I'm sure people talk up there. That being said, please watch for the times that politicians head to the podium to begin speaking. The market will dip. It's been happening all over the place, and it might end up coming out and them saying something fantastic and it popping to the upside. But if you know some gent or gal is going to be standing up there saying something, please watch your positions, make sure your stops are tight, and see if you've been stalling around a particular area. See, if you stall, it means you have no momentum. And like everything, if you've got to turn a corner, at some point your acceleration is going to be sitting at 0 because you're going to be reversing direction. So, what do we look for today? The breakup over 143.50-ish to continue forward, the move into 144.18, and then upward. The one fly in the ointment is this. Yesterday, we had a gap event that did not get filled. And this makes for the second gap in this last new wave. This gap all the way down here, this gap up here. Now, here's what we know about SPY, right? We know that SPY is one of those things that does not like to leave gaps open. just be conscious of that. And so if we really start dipping over and losing levels, we're going to have to be extremely conscious of, wow, okay, maybe I'm coming into spaces of much stronger support levels that I need to keep my eyes out for. If we fall into the gap, we should fill it. It is not a big gap. Large gaps sometimes give us a little stutter step at the 50% mark, which should be around 142.77. But if we come into 42.77, bounce into 143, and then lose it again, we know we're going to come down into the base of the gap. All right? Pay attention, folks. Candlesticks tell you the way every time. Higher lows, higher highs. You know you're moving up. Once you start making lower lows and lower highs, you're moving down. Pretty straightforward. All right? So don't make the market overcomplicated, and don't trade what you think so much so as what you think that's being confirmed by what you see. All right? Try not to get in front of these trades. I know we all want to press to the head of the line, but it's much better for you if you just wait it out. And if you say, hey, listen, but I want to move fast, I want to get in there, use a smaller time frame, right? Brian Shannon teaches us about multiple time frame events. When we start seeing things converge, we know we've got good things ahead. But if you want to get the jump, don't get in front of the move. Get to the formation that looks like it's confirming the move when everything else in general is sitting in that same direction and you don't have conflict. The more arguments that you can make for opposing ends when you're trading, the more problems the trade is going to have. All right? Good luck.